Hejsan och välkommen till dagens lunchrap från East Capital Group. Jag heter Per Elcar och är vd för East Capital Group. Och med mig idag har jag en kollega som heter Ritish Rangwalla. Han är en senior analytiker från våran research hub i Indien. Av naturliga skäl, för att verkligen se till så vi får fånga upp den lokala känslan och nyinformationen, sitter just nu Ritish hemma i Mumbai och jobbar, och därför kommer den här presentationen hållas på engelska. Hoppas inte det står på något sätt. Som min kollega Victoria har meddelat tidigare, är det så att någon skulle vilja ställa en fråga under presentationen så finns det en chatt att göra det, och då kommer jag föra den vidare till Ritish. Innan jag släpper in Ritish kan jag säga det att Indien har ju varit en av de mest snabbväxande och är en av de mest snabbväxande ekonomierna. En av världens största ekonomier och har haft en fantastisk utveckling på börsen under lång tid. Fram till för ungefär 18 månader sedan. Då som det har blivit lite tjurigare på börsen. Men några månader sedan tillbaka har vi sett återigen en ganska bra utveckling. Och för någon vecka sedan så slog faktiskt börsen på Indien all time high och ekonomin har varit väldigt stark. Så att för att fånga upp lite grann vad som har hänt, varför den här utvecklingen har skett, men inte minst framöver och hur vi inom East Capital Group med Ritish och hans kollegors hjälp kan skapa värde i våra två fonder där Indien ingår, så tänkte jag att släppa över det. Så Ritish, welcome to the wrap. I just in Sweden basically said that it's been a fantastic performance of the Indian economy and on the stock market up until 19 months ago, where we had a slightly more sluggish period, and now we see a good recovery, and I know you're going to give us some good also info for the future. So with that, please Ritish, it's happy to have you on board, and I'll let you, the floor is yours.
Thank you for joining us today at East Capital's Group Luncheon. Today, my main plan and my main message is to take you through India's growth journey, supported by the latest data and statistics, and show you how these trends have translated into real opportunities for your portfolio. Right. So India stands at a pivotal moment in its economic history. You know, after a brief cyclical pause, the country is poised to accelerate its growth trajectory. In the second quarter, that's the September quarter that just ended, India's GDP grew by an impressive 8.2% YOY, and this is a 6-quarter high and well above market expectations. I think what sets India apart is its increasing reliance on domestic drivers, structural reforms, infrastructure investments, and obviously a burgeoning middle class, which make it less vulnerable to global uncertainties. As correlations between India and global indices decrease, investors in diversified emerging market portfolios such as ours can benefit from lower volatility and enhanced return potential. Recent economic data points to an inflection after a cyclical slowdown. We are seeing signs of a renewed momentum. Foreign investors who have a historic high underweight on India may soon realize the value and drive a meaningful uptick in returns. So let me start by giving you a bit of the history, right? So 10 years ago, when Modi took office, he embarked on a very ambitious reform process, and the results of that reform speak for its volumes. You know, the productivity dynamic of India has improved meaningfully, and this isn't just abstract economic jargon. You know, it's about goods moving faster, businesses operating more efficiently, and our economy becoming more competitive. Let's start with infrastructure, right? Where the transformation has truly been just breathtaking. Our highways, the length has increased at a staggering 1.6 times since 2014. Think about this. In 2014, we were just adding around 11.6 to 11.7 kilometers of highway per day. Today in 25, that figure is 34 kilometers per day. This is exponential growth, in connecting our towns, our cities, our villages, and like never before. And this facilitates commerce and trade and permitting individuals to travel for better jobs across cities. You know, the skies are busier than ever. and for a good reason. The number of airports has more than doubled in the last 10, 11 years, reaching a total number of 487 today. And we are committed to adding almost 8 to 10 airports every year for the next 10 years. This is the kind of growth that you don't find anywhere in the rest of the world. Waiting times at toll plaza, right, have plummeted from this frustrating 12 minutes that we used to face in 2014. It's down to a mere 47 seconds. This is a testament to the technological adoption and streamlined processes that India has incorporated. Our railways, which is the lifeline of our nation, has undergone a rapid modernization. The pace of railway electrification has more than doubled. From just 7.5 kilometers added per day, today we are adding around 15.3 kilometers per day. And lastly, and most importantly, our ports, right, which are the most crucial point for our global trade, have seen a tremendous improvement in turnaround time. The turnaround times have dropped 50% in the last 10 years. What does this mean? It means faster trade. It means lower cost and means greater competitiveness for our companies on a global on a global stage, right? But let's move beyond infrastructure, right? There was the strong targeted policy initiatives to improving the participation and productivity of our population, and more specifically, the women population in India, right? And let me take an example. There was this policy that was incorporated around 7 years ago of giving free cooking gas connections to around 100 million homes, the poor homes in India, right? And this had a profound impact in labor revolution and labor productivity. Let me elaborate here. Traditionally, our poor households in the agricultural sector have been using cow dung cakes as cooking fuel, right? When you replace this with cooking gas, it saves almost 3 hours of cooking time versus a charcoal or a manual gas stove, right? And this not only improves the health, but improves the productivity of the woman too. So what does the woman do with the 3 free hours that she's got? She starts taking on additional responsibilities. She starts helping out in the farm. And what does that help? This helps the men of the home to go further away from the cities, from the villages, and take on more value creative, higher remunerative jobs, right? And that's exactly what this chart shows. If you see on the right, the agricultural participation of women has increased from 57% in 2018 to almost 64%. And at the same time, if you look at the bottom, on the males, where have the males moved, right? They are moved into the value-added jobs, right? Becoming chefs in hotels or restaurants or waiters, probably becoming Uber drivers in cities too. Now, all this is driving a revolution. This leads to a virtuous economic cycle. And that's what these numbers are basically showing. Between 2018 and 2024, 80 million rural female workers that accounted for an incredible 57% of new workers were added to the workforce. Over the same time frame, the percentage of men in agriculture has decreased, as we see above here. But most importantly, as a household's wallets expanded, as the savings grew, in the last 10 years, we removed 269 million people from poverty, extreme poverty, right? Extreme poverty, as per the UN, is classified as people earning less than $3 per day. This is a testament to inclusive growth strategies, targeted welfare programs and collective efforts of a determined nation. It's a humanitarian triumph of immense scale, which you will not find anywhere else in the world, right? And with such monumental achievements, it's no surprise, right, that Indians are overwhelmingly optimistic about their future. This is a chart that basically shows that how, as of today, how the current generation thinks of future generations. Do they think they'll be better off or they'll be worse off? As if you look at the developed world, France, Germany, Japan, these guys are very pessimistic. Very few of them, only 9% or 14 to 15% are optimistic about the future generations living a better life than they have. But look at what Indians think, right? 66% of Indian current generation believe that future generations are going to be more better off than they are right now. Now, we acknowledge this optimism, but I don't think we can take this for granted. India is on a reform process, and reforms must continue, both structural, regulatory, and social, to ensure that the growth rate that we are on now is sustainable over a long run. And when, again, pointing to some data, when productivity increases, when earnings increase, and your savings increase, right? This results in like the middle class population starting to move up the consumption chain, right? And you're talking about 600 million people moving up the consumption chain, right? And they shift and they shift towards more aspirational products, and that's what this data shows you. If you look on the left, the number of Indians that we sell around 4.5 million cars a year. And if you look 10, 12 years ago, 85, 86% of the cars sold were the entry-level cars, right? The cars that cost less than $6,000, $5,000. And the SUVs were just accessible to the rich. But today, where almost 65% of all the cars that are sold in India are SUVs, on an average costing $15,000 to $20,000, right? Also on the right, India sells 20 million two-wheelers per year, right? Similarly, 12 years ago, 50% of these 20 million, that's 10 million two-wheelers, used to be in the entry-level segments, right? That is costing less than around $600. Today, that percentage has dropped drastically, and just 30% of the 20 million vehicles are the entry levels. Also, I think it's worth highlighting that the ongoing shift in India's savings pattern, right? It's very interesting because not many people around the world kind of appreciate this. So look, because of a combination of our cultural heritage, right, and to some extent the colonial past, that is just 75 years ago when we got independence, Indians' savings are largely in very safe, risk-averse, protective investments rather than growth-oriented investments, as you can see on the left, right? Property, gold, bank deposits, like they all command among close to 80% of a household saving on an average, right? Now, but now put this in. Why don't you couple this with today's young generation, right? We're a population with an average age of 29, and you have this vibrancy that's been created in the last 10 years in the economy, right? And a 29-year-old is aspirational, he's impatient, and he wants to shift away from traditions, right? So he's definitely not wanting to invest his savings in gold or bank deposits or property, right? He'll probably go for a rental property. But he's shifting away from these traditional savings mechanisms into the growth-oriented aspirational asset class, which is equities. And that's what you see in the last 5-7 years, right? Equity allocations of household savings has moved from barely 3.5% to a good 6.5%. Now, even 6.5%, if you compare it to developed economies like the US, which is like close to 30%, Europe, which is close to around 18 to 20%, we have a long way to go, right? What makes this even more interesting, sustainable, is this gold deposit that the Indian households have. Today, Indian households have 27,000 tons of gold as a part of their jewelry and savings, right? This is valued today at $3.5 trillion, right? We are an economy of close to $4.5 trillion. And only 30 billion of this gold has shifted away into equities, which just tells you how much potential there is for this growth in allocation to equities there is going forward, right? And just picking up further on this allocation towards equities, just to give you some numbers, Indians today are putting around 3.2 billion USD on a monthly basis in mutual fund SIPs, right? And the number is only rising. This is an annual number of $42 billion. Over the last 5 years, this number has been we put close to $200 billion into equities, right? And what has happened to the foreign investors on the other end, right? They've largely, if you see the chart on the left, they've been negative, right? This year too, they are negative $16 billion YTD. So the foreigners are clearly missing out. But more importantly, what I wanted to highlight is this mobilization, this financialization of your household savings is driving a major decoupling that we are witnessing. And this is something that it doesn't get spoken about enough in the investor community. You know, Indian equities are no longer dependent on foreign flows as they used to be. Indian funds now account for a historical 18 to 20% of all the holdings in our companies listed in the listed marketplace. And the foreign investors, which used to be at an all-time high of around 24% around 4 years ago, have now seen their holdings slide, and they own barely around 16.5%, and it's dropping further. So net, you know, India is decoupling from the world. Its correlation from, you know, the global indices is reducing, right? And it's an economy that is largely shaped by domestic flows and growth rather than global trends. You know, historically, this chart what it shows on the right. Sorry to get a little technical on this, but you know, we used to have a correlation of 1 to global indices, right? But now, if you see, this correlation has dropped to 0.5, right? What does this imply? Today, if you were to allocate money, you want to make sure that you are allocating money to India, because if you have a 0.5 correlation, right? And if you're worried about global uncertainties, if you're worried about the US overheating, or if you're worried about the Middle East crisis getting out of hand, or you're worried about the Russia-Ukraine crisis pulling out of hand, you need to be invested in a large growing country like India, which has limited correlations and interactions with the global economy, right? This not only limits your downside risk, but it also gives you a handsome and an impressive upside potential. Yeah. Now, this is something on a long-term valuation chart, which I thought I should mention. Most of the investors in the developed world, you know, they consider valuations of over a long timeline, right? Such as 15 to 20 years. You know, while this might be appropriate for developed, mature economies like the US or EU, I don't think it's appropriate for a country like India, you know, because it's going through such a radical shift. You know, as I highlighted, it is productivity dynamic. There's a shift in its household savings from gold to equities. You know, because these changes are now starting to filter through the economy and placing it on a higher sustainable growth path. You know, hence, if you were to compare just a 5-year history where these structural changes are starting to have effect, then valuations look pretty reasonable and attractive, right? And that's what you see out here. A 21.7x at the current rate is relatively benign compared to the last 5-year history and looks attractive. Now, you know, let me shift gears a bit. I think I've given you a fair about picture of the structural long-term growth trajectory that India is on. But this long-term growth trajectory is always going to have its cyclical highs and lows, right? And we saw one in 2024. So what happened in 2024 was, you know, it was an induced growth slowdown. You know, what I mean by that is both fiscal and monetary policies intentionally turned restrictive to rein in the inflation that was caused due to the stimulus packages and loose lending standards that were implemented after the COVID debacle, right? And because of these loose policies, we had inflation reaching a high of around 7.5% in the middle of 24. And at that time, the government realized that it's time to pull back and consolidate its balance sheet. Let's get the fiscal deficit in order. right? Because a 6.5 to 7% is relatively high. They needed to consolidate, and they've been on that path for the last 2.5 years now. Also, the central bank, right? They saw some segments in overheating in the consumer and microfinance, and they felt that this could potentially cause some risk to the banking sector, especially because credit growth was high at around 17-15%, as you see on this chart on the left. And with inflation picking up, then the poor people have a hard time paying back their loans, right? And that could lead to a crisis on bank and pose a potential risk to banks' balance sheet. So what they did was they tightened interbank liquidity. They raised interest rates really fast. And this led to an intentional slowdown in credit growth, right? As you see, we were a high of 17% in 2023, and we brought it down all the way down to 10% in the last 6 months. But mind you, this is a policy initiative both on the fiscal and monetary side we have not seen anywhere in the world. India was the first country to do a consolidation and a restriction of its fiscal and monetary policy together and ahead of everybody else. Why is this important? Today, our government balance sheets are very much at historic levels, right? We are targeting a 4% fiscal deficit. And, the world outside of India is not in the best place, right? Uncertainties have risen. Questions are being asked, right? Because the number of wars that we're fighting in this day and age are a lot higher than what they used to be in history. Nobody knows how they will pan out. If there were to be a large drawdown or a large risk emanating in the global scenario, Indian balance sheets, both from the banking sector as well as the government, is well equipped to support the economy. This is what the cushion that is being built. This cushion you will not find anywhere else in the world, especially in the emerging markets. And that's why this is important. And that's why I think India really stands out. While this prudent policy approach helped curtail risks that were coming up in the banking sector, it led to sharp outflows, right? We did see near-term pain for sure, and India underperformed. It's been the underperforming market of 2025. We've never underperformed to such a large extent historically in our last 25-year history. But yeah, you name it, EM or whether it's developed world, India did underperform massively, right? And that was also accompanied by some of the highest flows that we saw out of the emerging markets. As I mentioned earlier, India has seen roughly $17 billion of outflow from foreign investors, right? Let me skip this slide, sorry. But coming back to where we are today, right, after the brakes were applied, once the brakes were applied and the economy was stabilized, the government realized that its job was well done and the intended result was achieved. It went on a spree announcing a host of fiscal incentives. It started in the month of February, March earlier this year, giving massive tax breaks to our middle class that improved their savings by almost 20% of their earnings, right? Indirect tax burdens were reduced, right? Earlier in the month of October, there was a massive indirect tax overhaul, which led to a lot of our consumer products, such as two-wheelers, microwaves, washing machines, prices dropped by 8 to 10%. And inflation had reached an 8-year low of 0.25. Now, just put this in context. I just said in 2024, we were at 7%, and you brought it down all the way to 0.25% in a matter of 18 months, right? This tells you the effectiveness of our policies. And the consumer and the economy took the bait, right? The last GDP print that we saw for the month of September 2025 was a 6-quarter high of 8.2%, 90 bips ahead of any estimates that there were on the street, right? More importantly, the growth was backed by consumption, which is 60% of our GDP, right? And this momentum, by all means, is expected to continue. And the reason why I say this is This data that we have is only till September 2025. October and November is when our festive season started, our Diwali season started, right? And the festive growth that we saw in consumption, in car purchases, Hyundai sold over 15,000 cars in a single day. They've never seen that in the history of this country that they've been here. They've been here over 25 years now, right? Even retailers, they've never seen the height of footfalls that they saw during the festive season, and the momentum that they saw after the festive season ended in the second week of November. Another number, Amazon and Flipkart in the month of October hired 340,000 gig workers to ensure that deliveries were made. And all these guys are still on their payroll. It's not that they've let go of these guys as yet. Which all tells you that the momentum in consumption is continuing. And going forward, we for sure will either be ahead of this 8.2% growth rate or at least stabilize at some number close to this, right? And finally, coming to our corporate earnings, yeah, no doubt, when interbank liquidity gets curtailed, as it did over the last 18 months, it has a direct impact on corporate earnings, and that drove a very serious, downgrade cycle, right? As you see on this chart on the left, the number of downgrades to upgrades was massively in the negative segment. But now, since the last 2 months, we're very close to moving into the positive territory, right? At the same time, foreign investors, right? They are at a 10-year low of their allocation to India. You're approximately 260 bips underweight India versus the benchmark. We've never seen foreign investors behave so pessimistically, right? Foreign investors are not picking up the cyclical upshift that we are seeing in the economy. They're late to the party, if at all they are. Sorry.
Ritish, yeah, if I may interrupt there. I mean, this story always gives me a lot of energy, enthusiasm, and your basically conclusions from the economy and the support from the government, so forth, fantastic. If you then, I mean, one of the things that I always find fascinating to listen to your stories when you meet companies that may not be well known among many of our investors. I know you have had a very intense traveling schedule over the last few weeks, or basically a month. Can you give us some interesting picks from the most interesting companies that may or may not be part of the funds, but also really take advantage of the trends that you've been describing for us?
Sure. So yeah, David, myself, and Jacob, we were on a recent road trip in India where we visited some of our portfolio companies and attended a conference too in Mumbai. One or two clear trends that we saw is the foreign investors are definitely back. They are back meeting companies and researching companies as compared to 6 months ago when I attended the conference, and there wasn't a single foreign investor present at that conference. So foreign investors are back almost at every meeting that we had. I would say 20 to 25% of the audience was foreign investors. So they're definitely having a relook at India. From the company's point of view, the companies that we met, most of them had a very palpable excitement about their future. Some are even fast tracking their investments and expansion programs, right? And we also visited some of our portfolio companies, just to highlight one. Continental Coffee is one of our large allocations in our India portfolio. It is the largest instant coffee manufacturer in the world outside of Nescafe and Brew. Just to give you a snippet of what the thesis is for this company, nobody today, in today's day and age, who's below the age of 60 wants to consume a Nescafe anymore at home, right? And this trend is all the more visible in Asia, where the younger population is getting highly influenced by coffee culture and desires a gourmet and a customized coffee experience at his home too, right? And this is what is driving tremendous demand for this gourmet instant coffee in the region. For example, China's consumption of instant coffee is doubling every 3 years. India's instant coffee consumption is growing at 15 to 17% CAGR. And CCL is a 25-year-old, very reputable company we felt is the best place to capture this trend. Also, this company is undergoing a massive capacity expansion program where it's doubling its capacity. And that program ends in the next 1 year. But the reason why we liked it so much and we got an information edge is because the street does not believe that this company can execute this massive capacity expansion in time. And we believe that with our intrinsic work that we've done about the company, the amount of work that we've done on the history of the execution track record of this company, we believe the company is well poised to take care of, to capitalize on this macro trend and deliver ahead of what the street is estimating. So yeah, that's some snippets from our recent trip. I'll hand it back to you, Per.
Thanks very much, Ritish. Once again, I think it's extremely encouraging to listen to not only what's been done, what is being done, what is being done right now as we speak, but going forward, the numbers are staggering. Another question I got this morning from one of our customers was basically saying that having you now on the ground talking to, in this case, Mumbai, you've been on the road in India for a number of weeks now, meeting companies, not only in the big cities, but also maybe even more importantly, out in the country. I mean, you've already touched on the confidence and the pride of the Indian people and the prospects of the youth. But if you just could give us some more flesh on the bone, basically, how do the broader population see the future prospects for themselves and for the country?
Well, from the company point of view, I would say, most of the sectors, whether it's manufacturing, whether it's services, we didn't find anybody holding back expansion plans, right? All of them were on a recruitment spree. All of them were ordering machinery, placing orders, wanting to fast track their growth plans. But and this vibrancy is translating, like, for example, I sit in a building with close to 1,000 people, right? It's a shared office space. And there are 1,000 employees working in various startups and various small and mid companies too. You can just sense the palpable excitement that there is, right? You don't find people, standing in the sidelines in a hallway or something with their faces down, looking depressed. There is a sense of excitement. Everybody is the laptops open, the conference rooms are always booked. And I think that's on ground level, that's what we are seeing. When I drive through any of the shopping districts, I don't find any of the retail stores that are empty, whether they're jewelry stores or clothing, apparel stores or footwear stores. All of them have a rush, right? So I think, and this is not what I saw around 5, 7, 10 years ago, right? When the economy was in 2014, 15, just coming out of a crisis where inflation was excessively high. There is a renewed sense of enthusiasm I'm sensing in all my colleagues and all the people that I come across.
It's great to hear, and the numbers back what you just said, of course, is backed up by the numbers that you have presented and we've seen for a number of while. One of the benefits of having people, for us working with our fund management for the accounts of our clients, basically pick up all these sectors, companies that take not only benefit from the overall thing, the economy expanding, but also clearly pockets of money and things where international investors have not yet understood the expansion and the growth being basically picking up. If I then basically, before we wrap up, if I could ask you and basically hand the word back to you, Ritish, if you, in 3 bullets basically on the screen, could just summarize what you've said. You've already done it very well, but just very briefly in 3 bullets describe what is the long-term story and how do we benefit and how do our clients benefit from this fantastic development of one of the largest economies in the world?
Sure. So my biggest takeaway and my biggest message is that what I wanted to convey is India stands at an inflection point now, very clearly, right? The progress of the past decade, the resilience shown during global headwinds, and the promise of continued reforms, I think make India a market that cannot be ignored. And as investors, the question is not whether to participate, but how to position yourselves to benefit from this extraordinary journey. So yeah, that's the biggest takeaway biggest message from me.
Yeah, very good. And if you don't mind, I will basically switch back to Swedish to sum up now, Ritish. And I know you're doing well in Swedish, but I'll do this for you. Som ni ser här på den här sliden, East Capital har 2 fonder som har en stor exponering mot den indiska marknaden. Det ena är våran generella, det som vi kallar GEMS-fond, det vill säga den globala tillväxtmarknadsfonden, som är också en hållbarhetsfond, där vi då inkluderar Kina. Där är Indien den 3:e största marknaden. Sedan i somras så har vi en annan hållbarhetsfond som egentligen ser exakt likadan ut som våran stora tillväxtmarknadsfond, men där vi har fått ett intresse från kunder att inte inkludera den kinesiska marknaden, och där då Indien är den största marknaden, har den största inslaget av aktier i portföljen. Så vi har idag 2 fonder där Indien är en av de största marknaderna. I det vi kallar ex-China, det vill säga där vi tagit bort Kina, så är det den största marknaden. Och för de som tycker att, liksom jag, det som Ritish har beskrivit är en otroligt spännande långsiktig story, men också på kort sikt med ett ökat internationellt intresse, med en ekonomi som helt plötsligt expanderar och har en politik som gynnar många bolag och har en stark tilltro från den inhemska befolkningen, så tänkte jag be att vi skulle lägga på vilka plattformar som man då kan köpa våra fonder på. Och jag tänker inte läsa upp dem, ni kan se dem själva, men det finns egentligen på alla de stora plattformarna. Vi lär komma tillbaka mer med Indien, det lär finnas mer nyheter, och som jag sagt tidigare många gånger för er som har lyssnat, en av de absoluta nyckelområdena vi jobbar på, det är ju att hitta bolag som inte är lika kända på de stora globala fonderna någonstans. Så jag tycker att just vi pratar om kaffe eller andra bolag är typ ett exempel på det. Så att jag tackar er för det. And thank you very much, Ritish, for a very enthusiastic and an impressive, energizing story. Och för er andra, tack så hemskt mycket för att ni lyssnade. Och vi hoppas se er tillbaka på en snar wrap igen. Tack ska ni ha.